Hey everyone, welcome back to the channel. Today we're diving into a popular topic when it comes to building wealth, real estate investment. You've probably heard people say that real estate is the best investment. But is it really? Or is it just one of those things that sounds good but has its own set of challenges? In this video, we're going to explore the pros and cons of real estate investment, what makes it a great option for some people, and why it might not be the best choice for others. We'll look at the advantages of investing in property, as well as the risks and downsides to consider. Whether you're thinking about buying your first investment property, or just curious about how real estate can fit into your overall investment strategy, this video will give you the information you need to make an informed decision. So, let's get started with understanding why so many people turn to real estate as a way to grow their wealth, and also why it might not be for everyone. Before we dive into the advantages and risks, let's quickly define what real estate investment actually is. Simply put, real estate investment involves purchasing property with the goal of making a profit, either through rental income or by selling the property at a higher price. It can include buying residential homes, commercial buildings, land, or even real estate investment trusts, REITs, which allow you to invest in real estate without directly owning property. The main idea is that the value of the property will increase over time, or you can generate consistent income through rent. So, it seems like a solid option for anyone looking to build wealth over time. But like any investment, there's a lot more to it than just buying a property and waiting for it to appreciate. Let's take a closer look at the pros and cons of real estate investment. There's no denying that real estate can be a powerful tool for building wealth. In fact, many of the world's wealthiest individuals have made their fortunes in real estate. So what makes real estate investment such an attractive option for many people? Let's break down the main advantages. One of the biggest reasons people invest in real estate is the potential for property appreciation. Over time, real estate generally increases in value. Of course, this depends on the location, the economy, and other factors. But in the long run, many properties tend to increase in value, which means you can sell for a profit. This is the essence of capital gains, when you buy a property for one price and sell it for a higher price later on. If you invest in the right property, in the right location, and at the right time, you can see your property's value rise significantly. For example, if you bought a property in an up-and-coming neighborhood and the area becomes more desirable over the years, the value of your property could increase dramatically. This appreciation is one of the main reasons real estate can be such a lucrative investment. Another big benefit of real estate investment is the potential for passive income. Once you own a rental property, you can generate regular income from rent payments. This can be a great way to earn money without having to actively work for it. If you have a good tenant and manage the property well, you can collect rent each month, which can cover your mortgage payment, property taxes, maintenance costs, and still leave you with extra cash. Over time, as you pay down the mortgage, the rental income can become an even more significant source of income. Additionally, rent often increases with inflation, so your income can grow over time, providing a steady cash flow and helping protect your money from inflation. Real estate is one of the few investments where you can use leverage, which means using borrowed money to make the investment. In most cases, when you buy real estate, you don't have to pay the entire purchase price up front. You can use a mortgage to finance the majority of the cost and then pay it off over time. The great thing about leverage is that it allows you to control a larger asset with a smaller amount of money. For example, if you buy a property for $200,000 with a 20% down payment, $40,000, you're using leverage to control an asset worth $200,000. If the property appreciates and you sell it for $250,000, you make a profit on the full $250,000, even though you only invested $40,000 up front. This can significantly amplify your returns. Real estate also comes with several tax advantages. Property owners can deduct many of the costs of owning and maintaining a property, including mortgage interest. The interest you pay on your mortgage is deductible. Property taxes. You can deduct property taxes you pay on your investment properties. Depreciation. Real estate is considered a depreciating asset, which means you can write off the depreciation of your property over time. Maintenance and repair costs. Expenses related to managing and maintaining the property can be deducted as well. These tax benefits can help offset the costs of owning a property and increase your overall return on investment. While there are certainly many benefits to real estate investment, there are also some risks and downsides that you should be aware of. Let's take a look at the main disadvantages. Real estate investment typically requires a large upfront investment. You'll need to come up with a down payment, usually 20% of the property's value, as well as cover closing costs, taxes, and any initial repairs or renovations needed. Even if you plan to use a mortgage, the initial costs can still be high, especially if you're looking to invest in a more expensive property. If you're just starting out and don't have a lot of capital saved up, this could be a major barrier to entry. Real estate is a less liquid investment compared to stocks or bonds. Liquidity refers to how quickly an asset can be converted to cash. In the case of real estate, it can take weeks or months to sell a property, and you may not get the price you're hoping for if the market isn't favorable. This means that if you need cash quickly, real estate might not be the best option. Unlike stocks, which you can sell at any time, real estate requires a longer time commitment and may not be easy to access if you need liquidity in the short term. Owning property comes with the responsibility of managing and maintaining it. This can be a significant time and financial commitment. You'll need to handle things like repairs and maintenance. Whether it's fixing a leaky roof or replacing an old appliance, repairs can be expensive and time-consuming. Tenant issues. If you're renting out your property, dealing with tenants can sometimes be a hassle. You may face issues like late payments, property damage, or the need to find new tenants. Even if you hire a property management company to handle these tasks for you, this comes at an additional cost. Property management fees can range from 8% to 12% of the rental income, which can eat into your profits. Real estate, like any investment, comes with market risk. While property values generally increase over time, the market can go through periods of decline. If there's a downturn in the housing market, you could see the value of your property drop, or you could have difficulty finding tenants. Economic factors such as interest rates, employment rates, and the overall health of the economy can all affect the real estate market. If the economy is struggling, people might not be able to afford rent, or property prices might fall, which could make it harder to sell your property for a profit. Buying and selling real estate comes with high transaction costs. These can include real estate agent commissions. Typically, agents charge around 5 to 6% of the sale price when buying or selling a property. Closing costs. These can add up to several $1,000s in fees, including title insurance, inspection fees, and loan origination fees. Capital gains tax. If you sell your property for a profit, you may be subject to capital gains taxes, especially if you've owned the property for less than a year. These costs can reduce your overall profit and make it less attractive if you're looking for a quick return on investment. So is real estate investment right for you? Like any investment, real estate has both pros and cons. On the plus side, it offers the potential for appreciation, passive income, leverage, and tax benefits. However, it also comes with high initial costs, liquidity issues, property management responsibilities, and market risks. Ultimately, whether real estate is a good investment for you depends on your financial goals, risk tolerance, and ability to manage the complexities that come with owning property. If you have the capital to invest, a long-term outlook, and a willingness to deal with the ups and downs of the market, real estate can be an excellent way to grow your wealth. I hope this video has helped you understand the pros and cons of real estate investment. If you found this information helpful, don't forget to like, share, and subscribe for more content on investing and personal finance. Thanks for watching, and I'll see you in the next video.